What's up trading nerds, and welcome to a new video. In this video I want to present to you the MACD trading strategy. I will explain every condition of the strategy and then we will have a look at some backtesting results of an automated backtest from this strategy. Watch the video until the end to get access to the strategy script so you can test it for yourself. And now let's start with the video. Let's first talk about the indicators we are using in this strategy. The MACD is a momentum indicator and is based on exponential moving averages. It has two lines, an MACD and a signal line, and a histogram showing the difference of these two lines. For the backtest, we will use the default settings, but in the strategy script you can easily change these. We are also using an exponential moving average, or EMA, with a length of 200. This EMA will be used as a trend indication. And now let's talk about the strategy entry and exit conditions. First, we want to trade only with the trend. So we will only take long positions if the price is above the 200 EMA and only take shorts if the price is below it. For our entry signals, we are looking at the MACD. We will enter a long position if the fast MACD line is crossing up the slow signal line. This can also be seen as a change of the histogram from negative to positive. Also, for a valid signal, this cross must happen under the zero line. At the open of the next candle, we will then enter a long position. For a short position, we are looking for the opposite signals. So the histogram needs to go from positive to negative and the signal line needs to be above the zero line. At the open of the next candle, we will then enter a short trade. One additional note, we will only take trades if there is no open position of the same direction. For example, if we have an open long position and we get another long signal, we won't open another long trade. Because these positions are highly correlated, meaning the outcome of these trades are very often the same. Because we want to use proper risk management and don't just want to increase our drawdowns, we are not taking these trades. But if we get signals of the opposite direction, we will close our current trade even if it hasn't hit our take profit or stop loss, and then take a trade of the opposite direction. So for example, if we have an open long position and then we get a short signal, we will close our long position and open a short trade. We do this because the market conditions have changed and we got new information. Now let's talk about the stop loss strategy and have a look at the backtesting script. We have two options for our stop loss strategy. First, we use the lowest low of the last X candles for a long trade or the highest high of the last X candles for a short trade and place there our stop loss. The second option is to use an ATR based stop loss. The ATR is a volatility indicator. We will use the ATR value and multiply it by a factor and then calculate our stop loss. For a long trade, we will subtract this result by our entry price, and for a short trade, we will add it to the entry price. To select our stop loss strategy, we go to the exit strategy section of the script settings and choose for the stop loss strategy either HHLL for highest high lowest low or ATR for the ATR based stop loss. Below that, we can change the lookback length of each strategy and also the ATR multiplier. The last option at the exit strategy section is the risk-reward ratio. This will multiply our risk, which is the difference between our entry and our stop loss, and by that calculate our take profit. We also want to use proper risk management, and for that we will set the risk percent per trade to 2% at the strategy backtest section. If this box is not selected, the script will take the options of the property section. There you can set the order size to contracts, a specific currency value like 100 USD, or a percent of your equity, which is the initial capital plus the net profit. And now let's have a look at some results of the strategy of the Euro USD, BTC USD and Apple stock. For all markets, we are comparing both stop loss strategies, the highest high lowest low and ATR based stop loss. For calculating the take profit, we are using a 1 to 1.5 risk reward ratio. And now let's have a look at the profit graphs. Let's have now also a look at the profit factors. Here we can see that the short trades of the Euro USD weren't really profitable, but the strategy had a decent profit factor at the Apple stock. If we have a look at the win rate, we also see that the Apple stock had the highest win rate of all three markets. But also the maximum drawdown were the highest, so probably we should decrease the risk percent per trade. And now at the end, let's talk a bit about the trading script. Another feature of the script is a small table at the top right corner that tells you the entry price and the take profit and stop loss prices of a new trade. If there's currently no open position, it will also indicate that. If you want to backtest the strategy with different indicator settings, you can do so. The script is highly customizable, so you can set the EMA length, all the MACD settings and the risk reward ratio. You can also limit the strategy backtest range to backtest only a specific date range or market structure. You can also set up alerts for the long and short entries and the stop loss and take profits. At the properties section, you can also set a commission and a slippage. But the best of it, it is completely free. Just click on the link at the video description and you can add it to the chart. Or search at the public indicators for MACD strategy. That's it for the video. Give it a thumbs up if you liked it. If you have any suggestions for strategies to backtest automated or changes for this strategy script, write it down in the comments below. That's it for now. I wish you a good day and happy trading.